Hyperliquid is at the center of a trend that's both an opportunity but also a massive risk. It's the leading decentralized perpetual futures exchange. That's an exchange that allows to bet on prices of cryptocurrencies with leverage. What we see over here is the trading volume of all decentralized exchange perpetual futures over time. And this is growing very rapidly, much quicker than crypto prices are. Now, on the one hand, that's an opportunity because it allows us to bet on rising prices or on falling prices in a capital efficient manner. But on the other hand, the reality of it is that net platforms like Hyperliquid introduce more risk and introduce more leverage into the market. What we see over here, that's the ratio of long traders versus short traders over time. So how many wallets are betting on rising prices versus falling prices? And this is a multiple above 1 most of the time. In the very worst case, there's more than double the amount of long traders versus short traders. Currently, there's 2.5 times more long traders versus short traders. So most people that use the Hyperliquid platform are betting on rising prices. And why is that a problem? It's a problem because if the price doesn't go in the right direction, we can get a liquidation event, a cascaded liquidation event. One sell-off might create the next sell-off, might create the next sell-off. And that's what we've just seen a few weeks ago. You might remember the flash crash in crypto. This is the others market cap. So the market cap of all of the altcoins that are not in the top 10. And this fell by 48% in the span of just a few hours. Many longs got liquidated and lost all their funds. And then a few market makers picked up the pieces and bought for those depressed prices, creating at least a partial recovery after that crash. We are still quite above that low point that we saw during the crash, but it shows us how much impact a growing perpetual futures market can have on the spot prices as well. Because here's what's happening. If enough people have to sell on the perpetual futures market, then arbitrage bots will balance this out with the spot market as well. Arbitrage bots will sell spot as well. More perpetual futures trading volume, more open interest also means more risk for a potential flash crash. So the growth of Hyperliquid is a blessing if you're betting on falling prices, because now there's an easy way to do so. We don't need to use borrowing and lending platforms anymore. But if you're betting on rising prices, you are introducing a lot of risk into your portfolio. But this video is not about what should be or what could be or what would be. This video is about where the hype token itself, the price of the hype token, will go from here. What's the demand and the supply dynamics? Let's have a look at the data most people are not considering. Now we're currently at $48. We went up by 27% last week. And one might argue that that is justified because the total value locked, the capital that's on the platform, tends to grow over time. This is now the TVL measured in Ethereum, because some of the assets that Hyperliquid holds are fluctuating assets. They do go up and down with the general market. Now, according to this metric, even though the long-term chart looks fine, we haven't seen that much growth since March of this year. But we can also have a look at the total value locked measured in US dollars. And here the growth is a bit more constant. We did see a crash. That's because of the massive unwinding of leverage that we saw a few weeks ago, but we are stabilizing now at a bit under 5 billion TVL. The problem, of course, is that the vast majority of the long traders got liquidated. So the open interest, the amount of bets on prices via Hyperliquid, went down extremely sharply. And there is a long way to go to recovery. We were at 15 billion of open interest and then went down all the way to only 6 billion of open interest. So 9 billion worth of bets got erased from the surface of this planet. And since that mass liquidation event, we've only seen another 2 billion getting added to open interest. The smaller the market cap and the smaller liquidity of a crypto asset, the more it was impacted by the flash crash. Have a look at the funding rates. Bitcoin dipped a little bit, Ethereum dipped more, Solana most. And then an example of one of the smaller altcoins, Cosmos Atom, that crashed the most in funding rates. So every single long trader got pushed out of the market. Now there's a saying, right? Money doesn't just disappear. It just goes from one pocket to another. So there have been some beneficiaries of that crash. One of those beneficiaries is the market makers. The nice thing about Hyperliquid is that it's an open protocol, so everybody can become a market maker. What we're seeing over here, that's the profit that has been generated by market making on Hyperliquid. It took the platform more than 2 years to generate 80 million of profit. But then during that flash crash, the Hyperliquid provider gained another 41 million. So that's just over the course of this single flash crash. It was a terrible day for most, but it was a great day for the mega whales. It was also a great day for the members of this community, right? There is a copy trading vault where people of premium can deposit into, and they get the exact performance that I get with my trading as well. And the week of the flash crash was the most profitable week we ever had. So if your risk management is on the right side, then you're making money with volatility. You don't get shaken out. You're among the few people that benefit from crises like this. Now let's get back to the HYPE token. What's driving demand and supply, and where will the price go from here? First of all, there is the usage of the platform. Everybody that uses the platform gets incentivized to buy the HYPE token on the spot market, stake it to then get a reduction in trading fees. So here's how that works. The more you're trading on Hyperliquid, the more turnover you have, the lower your fees are. But then also, the more HYPE tokens you have staked, the more trading fee discount you get as well. So if you've staked 10 HYPE tokens, you get 5% trading fee discount. If you stake 100 HYPE tokens, 10%, etc. One order of magnitude more HYPE tokens gives you 5% more trading fee discount. The problem, of course, is that Hyperliquid has this invisible ceiling, right? The HYPE token relative to the others' market cap. How is HYPE performing compared to other altcoins? That seems to not really go beyond a certain level. And I think it makes sense to take this potential drawdown seriously, the 24%. The main issue is really potential supply. It's not necessarily demand. The demand might be stable. The number of traders on the Hyperliquid platform will likely recover. The open interest will over time recover as well. But the problem is always how many new HYPE tokens will hit the market. And so far, the number of HYPE tokens was very flat. There was no change. But that will change in November. For the first time ever, the team can cash out. They get an allocation of 427 million worth of HYPE tokens. And they're getting that allocation every single month going forward. So 1 year from now, the team will own more than 20% of the entire supply. And that's of course a problem when the market cap is currently $16 billion. The fully diluted valuation is $48 billion. So the team gets billions and billions of dollars to cash out. All of the members of the team will become at least deca millionaires, potentially even more than 100 million each. The team is very small. Now there's not just the demand on the spot market to stake the HYPE tokens, right? There's also demand through the perpetual futures. Many people that like using the platform also consider investing into the HYPE token itself. And so the open interest on HYPE is recovering faster than for other assets. But have a look at the amount of open interest, right? It's 1.8 billion. That's just 3 months of unlock. Most perp traders are betting on rising prices, so the funding rates are positive. When the open interest comes down, that also means that the spot price will come down. It is surprising that there's still so much optimism around the HYPE price. I'm making here a clear distinction between the price of the HYPE token and the HYPE platform itself. Hyperliquid will likely see continued growth. Will the HYPE token itself still see continued outperformance versus the rest of the altcoin market after all of those unlocks? I'm not so sure. The trading volume around the HYPE token on the perpetual futures market is still constant. But just have a look at the valuation. The market cap is now at 13 billion. That's more than 3 times the market cap of Uniswap, which is the leading spot trading exchange. And that's for the supply that's already circulating. Have a look at the fully diluted valuation. That's roughly 7 billion for Uniswap. And again, it's 48, 49 billion for Hyperliquid. So Hyperliquid has 7 times the fully diluted valuation of Uniswap. Is that justified? I am not so sure. Now, I'm personally not betting on falling prices of the HYPE token right now. There is still positive momentum, but I'm looking for the potential inflection point to then bet on falling prices. Again, I like the platform, but I do not like the tokenomics. I do not like how aggressively the team can cash out. I think there is a lot of downside risk for the hype price. Much more than there is upside potential, given the valuation and given the token unlocks. It's really a question of how aggressively the team will actually dump their tokens. They might not sell their entire allocation with every single unlock, but they're likely going to put some selling pressure on the asset as well. The Hyperliquid team is very smart, so they might even use derivatives to cash out, or they might deposit their tokens somewhere and borrow against those tokens. They might do some financial trickery to obfuscate the selling. So it is very hard to say how much the unlocks will impact the price in the short term. In the long term though, it will reflect in the relative performance. I do not think that the hype token will outperform Bitcoin or Ethereum over the next 3 or 4 years. That's very unlikely. Now there's a very interesting misconception with altcoins. Have a look at this chart here. This shows total 3 ES divided by Bitcoin. Now what does this mean? Total 3 is the market cap of all cryptocurrencies that are not Bitcoin and Ethereum. ES means that we also exclude stablecoins. So this is all of the volatile altcoins that are not Bitcoin and Ethereum. And we look at that market cap relative to Bitcoin's market cap. So how are the volatile altcoins doing relative to Bitcoin? And it seems like this is trading in a range in the last 8 years. If we just look at the prior year, we also seem to just performed in the same way as Bitcoin. But clearly that is not true. Have a look at the performance of these smaller altcoins in the last year. Pretty much everything is red while Bitcoin went up. The key to the puzzle is to understand the difference between market cap and price. This here is an example of WorldCoin. WorldCoin over the years saw an increasing market cap. It went from a peak of 1.5 billion to 2.5 to more than 3 billion. So WorldCoin tended to grow in market cap. But have a look at the long-term price chart. It looks very different. WorldCoin's price peaked at close to $10 and is now below $1. There can be a massive disconnect. In this chart here, it just looks at the altcoin market cap relative to the Bitcoin market cap. And this is true for many altcoin related metrics. It's true for the others market cap. It's true for the others dominance. It's true for dominance charts in general. When we look at the Bitcoin dominance or the Ethereum dominance, we are just comparing market caps. We are not comparing prices. Even when the Bitcoin dominance stays stable, Bitcoin very likely has outperformed most altcoins because altcoins might have been stable in market cap, but they might have gone down in price. This effect that we see for WorldCoin is very typical for altcoins. Now here's the circulating supply of WorldCoin. Again, just an example of what's going on with the market. We had 500 million WorldCoin at launch, and that more than 8x'd over the span of 2 years. When we look at the entire altcoin market, at least the tokens that are tracked by Tokenomics.ai, we've got weekly unlocks of roughly $1 billion. So if the demand for the altcoin market is below $1 billion, if the altcoin market doesn't grow that much every single week, then the price goes down. Because all of those unlocks, they are tokens that get allocated to the early investors of the altcoin projects. They get allocated towards the founders. They get allocated towards the insiders. So they are cashing out at a rate of 1 billion per week. And if the retail investor doesn't buy at the same rate, then price goes down. So here is an example. This is WorldCoin in US dollars. Here is WorldCoin relative to Bitcoin. So a much more consistent underperformance. Now there are two potential takeaways from this. The first one would be to just completely stay away from altcoins altogether. Altcoins are rigged, altcoins are through dump on retail investors. But the second potential takeaway is to maybe flip this thing around. So we are betting on falling prices of WorldCoin, while at the same time betting on rising prices of Bitcoin. So when we flip this chart, we get this here. This looks quite interesting, doesn't it? Since launch, Bitcoin outperformed WorldCoin by 836%. So that's the kind of performance we are looking for. The problem, of course, is volatility, especially here at the end. So WorldCoin occasionally does have positive news. It still has development. It's still an active project. And so a strategy like this can still lead to temporary drops of 55%. despite the long-term outperformance. So the idea to bet on token inflation structurally is a good one. The idea to bet on falling prices when things look like this is a good idea. But risk management is crucial, and we have to look at assets that don't have that much more active development, where we don't see any positive news around the project anymore. Here's an example I like to give regularly on this channel. This is Bitcoin relative to Balancer. Balancer also has a high token inflation. And yes, there can be some drawdowns along the way as well, but they're not 50%, they're only 30%. And on a logarithmic chart, this looks much more manageable. And so this strategy doesn't just work in theory, it actually does work in practice. Let me show you how. When we look at this relative valuation chart of Bitcoin to Balancer, and we compare this to just buying and holding Bitcoin, so that's now the line in orange, we can clearly see how betting on the differential, so betting on falling Balancer prices by betting on rising Bitcoin prices, has a way better long-term risk-adjusted return. And so I followed this strategy for the last 4 years. This is a monthly chart. Had I just dollar cost averaged into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices at the same time, I got the performance here in black. Now the problem is, just because I make profit with that strategy doesn't necessarily mean that you have to make profit with that strategy. But I do believe in the strategy that anybody can mirror similar performance. What we've got over here is a copy trading vault. So the premium members of this channel had the possibility to invest in a capital pool. That capital pool is closed until the end of the year. But anybody that deposited in July of this year is now up roughly 20%, while Bitcoin since then went down in price. Of course, the massive market disruption that we saw recently helped us as well. It was actually the best weekly return ever. It brought us more than 9%. Most others got wrecked, but we made money. And so I made several videos on the topic. There's one video explaining the copy trading vault, but again, that vault is closed until the beginning of the year. But here are the two more important videos: using perpetual futures to bet on relative valuations, and risk management with relative valuation bets. Risk management is extremely important, because if you don't know how to do that, you get wrecked during volatile times. You don't make money. So here are the two videos. This is 34 minutes in length. Here's the other video, 28 minutes in length. And once you've watched those two videos and you've joined the premium groups, I will share my favorite trade with you. So the favorite trade will look very similar to the Balancer trade that we looked at. If you are not making money with that favorite trade after holding it for 1 month, I will refund the premium membership fee to you. So really, you are not risking those $125. If you're not making money with the trade, you just get this refunded. I will not ask any questions. If you want to be part of the next copy trading vault and you don't want to make the trades yourselves, you simply just want to deploy capital, then feel free to check out this video over here. This was the introduction to the vault from July. And feel free to consider to sign up for the annual membership, because the yearly subscribers, they get access to that copy trading vault that currently is closed. Of course, you can simply start out with monthly, start the trading yourself, and then swap to the annual membership later on. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.